Hey guys, welcome back to the channel. Today is October the 25th. It is Tuesday morning. We are now, the market's actually open, so I'm not going to say it's pre-session. It just opened a few moments ago. The topic at hand today is going to be surrounding, once again, volume profile and how you can actually use it in your own day trading, okay? And you guys see me each and every day. I have it to the right-hand side of my charts, basically all my charts, if you take a look at it. Some of them are more static, like this one here, the daily profile. This is a dynamic version of the volume profile histogram setting here on the right hand side, as well as you see it here on the other charts here, which are my higher time frames. But anyways, I do trade based using range charts, just by preference. So I get that question asked a lot. But like I said, the discussion is going to be how do I incorporate and how do I actually use, again, the volume profile indicator in my actual trading, surrounding the strategy of using supply and demand. Pretty much, you know, I have a pullback strategy that I use, and most times it's centered around paired charts. But you know, there are instances, plenty of instances, say for instance on the 12 range chart, where you'll see me take trades directly from the 12 range chart, but it's all centered around supply and demand. So if I see a demand setup or supply setup happen on the 12 range chart, I just simply wait for price to come back to it and look for the rejection. Very simple strategy. If you are a first time viewer, then hopefully you pick up on some information today in this video. But if you really want to get in tune to more so supply and demand, go back on my home channel, on the home page here on the channel, and just type in, with that little magnifying glass is, type in supply and demand, and it'll pull up several videos discussing supply and demand. I think I have well over 300 videos on this channel, maybe approaching almost 400 now, I'm not sure, but tons of information, good content information that will help you if you're anyone that's really trying to learn supply and demand, or maybe learn a strategy surrounding supply and demand. So you may understand supply and demand, but you just haven't devised or come up with a strategy that works for you in your day trading each and every day. So here is the volume profile. We'll take a look at it here from the instance of using the 12 range chart. And I want to show you a simple strategy, or how I use it within just basically, once I identify a zone, within just a very short period of maybe 5 minutes or less, and how you can actually identify a zone and get into a trade. Okay, it's very simple setup in a sense. So I've already drawn out a demand zone resting right here. Okay, and if you do not understand supply and demand, I highly recommend you learn it. Whoever you learn it from, if you want to watch some of the videos here in the channel, that's fine. But I trade it because, to me, it's just I really get into the move right at the beginning versus getting into a move halfway through. Yeah, some people trade support and resistance, and to me, support and resistance is more so like a break and retest type strategy, where, you know, let's say the market's made a high here, it's pulled back, it broke resistance on the move to the upside, and then you're looking for price to come back to what I classify is more so like the neck or the head of a swing area. So it's basically maybe the 50% area of a swing to the upside. Price retraces back to it. You're looking to catch a bounce off of which was once resistance, has now become support. Okay, so that's, to me, it's like a break and retest type of trading. But I'm not saying you can't trade that way. It works. You know, sometimes price will come, hit the area of support below, and then take off back to the upside and make a new high. But lots of times what you'll notice, and so for me, it's just so much more impactful to take trades back within the swing itself, especially if price has created an area of demand. As an example, like right here, okay, price pushed up, it pulled back, and it broke higher. Now, on the move to the downside, it broke support. On the move back to the upside, it broke through resistance, leaving behind areas of demand, these little small swings. Now, this is a greater area of demand in a sense, even though we didn't get a lot of rotation here. Again, this is a 12 range chart, so if you scale down to a 4 range chart, there was probably more activity, price action wise, that happened in this small little zipper right here. But either way, what we notice out of here is that this was a swing that pushed to the upside, where it took out areas of resistance, took out this area of resistance, creating an area or leaving behind an area of supply, of course. But what you really notice is that there's a decent push to the upside. So when you see a push like this to the upside and a pullback right here, okay, all right, and then you turn around and see a greater push to the upside, that's primarily the banks or institutions, you know, the market makers really filling orders to push the market higher, okay? So this is more so aggressive buying. So when I see a lot of candles coming out and creating out of an area to where it's breaking resistance, leaving behind an area of demand like this. And, you see where there's aggressive buying, where there's lots of green candles to the upside, then that tells me that that was a power play that the banks or institutions were trying to take part in the market, whatever the case is, or create the market by filling orders, okay? And most times, not all orders get filled, so price may come back to that area. They may fill more orders, and what do you see happen? It pushes up again. So I want to show you an example off of an area of demand, okay, and how I trade supply and demand using the volume profile. Now, those that have been following the channel know that I do not take trades using the volume profile right dead smack at a high volume area. Say if price is right here, I'm taking a trade right here, dead center in the center of it. No, I don't want to do that because first of all, the volume profile, areas where you see these big nodes at or big peaks at, they act as kind of like magnets in a sense, high volume areas. Price likes to move where it's comfortable at, and especially where a lot of volume has been built there. It acts as a barrier or blockade as a means of protection. What I like to do is to see price or take entries with the full setup to where price has pulled back to, say for instance, as an example here, a demand zone, and price pushes a little bit below an area of high volume, okay, at the outer edge of it. So I always talk about buying the lows. I mean, not only buying the lows of price, but buying the low outer edge area of a high volume node, say for instance, and because I know price is going to revert back to, say, the mean or the high volume node once it rejects that area of demand. Okay, once we get the full area or get the rejection off of demand, price is going to want to jump back up to that high volume area and possibly a bit higher, whatever the case is. So price likes to move once it taps into a high volume area or the outer edge of it and rejects. It likes to move from a high volume area through a low volume area back to the next high volume area. That's just the nature of price and how it moves. Okay, so we'll look at this example here real quick, and you'll notice price corrects this area of demand sitting right here. I went ahead and drew it already. This is off a 12 range chart. You can mark it up off a 5-minute chart or whatever, maybe your lower time frame entry chart may be. So I drew this box out here. Price comes back to the area right here. If I look at the high, where it's at in relation to the volume profile, when price pulled back and tapped to the zone here, it came right below the outer edge of a high volume area right here. Now, one thing you probably could also do is this right here. And the indicator I use, the volume profile, is from a company called discotrading.com, and it's actually called the range volume profile. You can go there and check it out. They're not giving away, but they're offering free temporary license right now for the use of the indicator. I purchased it many years ago, but right now, due to sanctions going on overseas in relation to the war, they are unable to process actual purchases or process orders right now. But they are a great company. They have tons of indicators that are some solid indicators that I know other people use as well. But the volume range profile, that suite that they put together and started years ago and continuously provide updates, is a very, very solid suite. People ask me all the time where did I get it from, and discotrading.com. So they have what's called and I believe NinjaTrader probably, I'm sure, not believe, they offer a order flow suite, and within the NinjaTrader's package, if you pay for a lifetime license, you get the order flow suite, and this is way before NinjaTrader even actually offered the order flow suite. NinjaTrader didn't have a volume profile type indicator and a suite built around order flow years ago when I first started, so I had to go out and find a third party one. So, but now if you purchase a full-time license, they actually offer the a volume profile indicator, and I believe it also has different features built within the suite itself. And what I'm trying to get at is this tool right here. It's called I call it the micro range profile, or where you can draw out a little mini profile anywhere or over any area that you're interested in. So if I draw a little profile over this area, just say for right here, okay, and we're looking at that rectangular box that I drew where that area of demand is, okay. Let me show it to you right here. Price comes back to it. It taps into it. It goes right below it a little bit. Okay, so I say I'm looking to take the trade once price gets into or taps into the demand area, right? Not immediately once it gets in there, but once it taps in there, then I'm looking for rejection. So I have to see an area of demand on supply, okay, and then price pulling back to that area. All right. Also, what I want to see is I'm looking at the volume profile and looking at to see if it's come to that area where there's a high volume area, all right, and prices kind of broke below the outer edge of it, all right. This is kind of a simplistic way of using the volume profile. Like I said, just within a matter of 5 minutes, once prices tap into a supply and demand zone, you want to be looking at it. Did it come back to an area where there's higher volume at the outer edge? Because, like I said, naturally speaking, when you see high volume nodes, that means that a lot of orders or transactions took place there. And of course, you can see that right here in a sense. I mean, the market's kind of telling the telltale sign right here. This volume right here means that there were orders. There was orders that were filled right here. There was a lot of transactions that took place. There was a lot of interest there in the market, and the market pushed higher. So price comes back there to it. Naturally, when price rejects the area, it's going to want to push higher. The thing is, as traders, we have to know where to get in at. So the way I approach it is once price pulls back to that demand zone, it's below it starts to edge right below the high volume area. I wait for a candle break. I wait for the next green candle to either close above the body of the red candle or start to break above and on the outside of the push through the wick of that candle. Whichever happens first, in a sense, for me. I'm aggressive, so typically speaking, most times you'll get a break of the body of the red candle to the upside with this green candle here. But sometimes price may continue. You know, it could be the formation of that candle may not start until like maybe halfway into the body of the red candle, and then it closes above or starts to push above the wick of that red candle, and I'll go long. But either way, I'm looking at price action as well on the pullback to that area of demand. And what I notice here on the way down is that price is making lower lows and lower highs, but it's also taking out areas of support. So it's taking out areas of support. What do you think is going to happen when price gets back to this area here? You're going to have an area of resistance, a blockade. So you got to think about it like this. When price breaks through an area of resistance, below it is created an area of support. When price breaks through an area of support, above it, it's going to create an area of resistance. You have to think about it like that, okay? So price breaks through an area of support here, above it, it's going to have an area of resistance right above it. So, but still, I still have some room to trade. If I'm looking at price action on the way down, price making lower lows and lower highs, as it's breaking through structure, breaking through areas of support. On the way to the downside, it broke through this area right here. The close of this candle here at 09.5, 38.09.5. I still have some room in between. Once price breaks this red candle to the upside, takes out the body of it, at the close of 38.05, you go long, okay? And your first probably contract or two you want to take out, just depending on how many contracts you trade, is going to be probably be back. It's going to be back up here at least 09.5. All right. The goal is to take it back up to this area right here where there's liquidity resting there. Always think about at the swing high or a swing low of a swing. There's always going to be liquidity resting there. Okay. That's how prices create. As it creates swings, there's areas of liquidity resting at the highs and lows. Okay. So when price rejects this area of demand, you could get into a trade, say for instance, even on one contract at the break of 05.5, take it up here to 09.5. That's 4 points on the ES. That's $200 per contract. One contract made 200. Trade two contracts, that's 400. And you're talking about that happened within just a minute of this is at the close of the market yesterday. Today's the 25th. So right at the close of the market, and actually I took this trade here. Yeah, I took this trade yesterday. This is where I believe I got in at right here, if I'm not mistaken, because I took a screenshot of it and I posted it on our Discord channel, which I'll talk to you guys about as well. Let me double check and see, was that the area? Yep, that was the area right here. Yeah, I took this trade yesterday afternoon towards the close of the market. I typically do not like to trade towards the close of the market because a lot of, I guess, a lot of electronic things are going on in the market. The algos are more so moving the markets in a sense. There's a lot of, just a lot of big power movements in the market. Whatever the case is, the market is really just volatile, very volatile, and I don't like to trade during that time. But if I see a nice setup, I'll try to take it, especially if the market is really not volatile and it's really not like moving quick towards the close. I may take an interest. But anyways, I did take it. Excuse me. I did take it yesterday, and I was able to capitalize on that entry there. But yeah, I mean, this is just basically how I use the volume profile each and every day in my trading. It's just a matter of marking off the supply and demand zone, wait for price to come back to it. And like I said, you could use this here. This is more of a composite profile that is dynamic. You see how it shifts as I scroll left to right, because it's allowing me to gauge or look at the volume just over a set period of time, and that's why I use it on the 12 range chart. On my 4 range, which is a more so of a daily chart, it's just basically looking at the price movement and taking into calculation what's happened just over the session itself in 1 day's time. So it's dynamic. But if I really want to zoom into a certain area, that's when I'll draw out this little micro range profiles, and it'll mark off the high volume area as well. Even the POC of an area which I'm working on, which is down here below. But again, here we have demand. We're at a high volume area. Price breaks slightly below it. You get the rejection. You look above it to see what could be a barrier or means of stop. Okay, what could be, where is resistance sitting above us here? Take that trade back up to the, try to take it back up to at least the area of liquidity here, which price does. But everyone that knows about the markets, price is going to have its movements, meaning make it swings, have those ebbs and flows to where it pushed up, it hit this area of resistance, pulled back, broke higher, met liquidity, and then pushed up higher to the next area of resistance. That's how price moves, okay? And there's a certain way of how you can actually, trail behind price and stay in the market, whatever the case is, but that's probably for another video. But we'll take a look at another example here as well. I'm going to go ahead and take this off. But that was one demand zone there. And then immediately, right after the market opened up, no, not immediately, it was at 8 o'clock yesterday evening, but shortly after, this was into the Asian session yesterday. The market made another area demand. I didn't take it because I wasn't sitting in front of a computer, but you can see the area of demand if you know about price creating areas of supply and demand and what to look for, and you would clearly be able to identify that this is demand resting right here. What did it do? It pushed up, broke through structure, okay? Once it breaks through structure, it pulls back, okay? This is the area of demand right here, and right here, okay? But it tapped into this zone here, okay? It rejected it. So let's mark off an area of, so if we just use the composite, say for instance, and we scroll here, and let's kind of like do this right here. All right, we'll do something like this. And this being the area of demand right here, price pulls back into it, taps into it. What do you see right here? You see price not only tap into the area of demand, but it's at the outer edge of this peak here, this volume area here, okay? And like I said, price likes to move once you get the projection from a lower area of a high volume area back to where it's comfortable at, back to that magnetic means of protection right here, dead smack in the middle, okay? At least to that area. So if you even got to a trade here and took it back up to this high volume area, you picked up a few points right there. But the goal in this, the way price unfolded here, it broke structure here and pulled back to demand here, and there was no basically roadblock on the pullback down. Price didn't really break any areas. Looking at the 12 range chart of a support in a sense, we're creating an area of resistance. So we're kind of in the clear here. So once we get that break of the candle here to the upside, we can actually take our attempt to go long. Okay, we got all the solid means of confirmation. Price tapping into demand, lower portion of the high volume area. Okay, we get the break of a candle to the upside, take the long. We're back up to the high right here, the most recent high of this move swing here, and that's liquidity resting right there. Okay, as simple as that. As simple as that. I don't need a bunch of indicators to trade with. I just look for a few things, and when I'm trading, and if it all lines up and it all unfolds, you enter. Okay, you can't hesitate, because if you hesitate, then you're going to miss the move, or you're going to catch it halfway through. Price going to pull back on you. I see this a lot with new traders, and they get scared out, they jump out of the market and lose money. You have to stay in the trade and allow it to unfold, and you also have to have a stop place, whatever the case is, in a sense. Regardless if it's a manual or hard, a manual hard stop or a mental stop, whatever the case is. Lots of traders like myself sometimes like to trade with just closing out of a position, because the moment that I get into a trade, before I even get to the trade, I already know where I need to place my stop at. If I'm sitting right here, I'm at an area of demand here. Price pulls back, it rejects the area of demand by breaking above, and I'm looking to take it back up to this area here. My stop is going to be at the back end, which is support right here. Okay, if you look at it from a lower time frame, you're going to see a supporting swing in this area right here. My stop is going to be at the back end, not tick to tick. Whether it's hard stop or mental stop, I know mentally I'm going to give this thing a few ticks stop below this area, not tick to tick, because look what happened here. Price pulls back right here. Sometimes what they'll do is they'll pull it all the way back tick to tick right here. Okay, stop you out if you got your stop loss sitting right here. Now, if you choose to do that, you're gonna get stopped out. You're gonna be a break even. You're not gonna have anything lost, but then you miss the opportunity where price pushes higher. So give it a few ticks right here. If you ask how many, it depends on the chart. You know, a 12 range chart, you definitely want to give it, I'm going to say between 8 to 10 ticks at most. Okay. Well, I should say at least. Below that area of the supporting area right here. Now, some people, what they'll do is they'll either place it below the supporting swing here, where they enter the trade from, okay, at the back end of this by several ticks, or they're going to put it right here at the back end of the actual area of demand. This is support as well, okay? So either way. So you have to know before you jump into a trade where to put it in, you know, put your stop at, as well as you must know where to get out at just as well. Some people just try to ride a trade and not really understanding price action and understanding what's happening on the pullback here if it took out any areas and where does resistance lie above. Well, in all honesty, we don't have it here. Maybe on the lower time frame chart, maybe the 4 range, there may be some smaller swings. Okay, but in looking at the 12 range, we're trying to stay in that trade back up to this high right here, and where there's liquidity resting at. Like I said, for every high, there's an area of liquidity. For every area of low out of a swing, like you know, here, these so areas of support, there's liquidity resting each time price makes a swing to the upside. All right, but that's all I want to share with you guys today. Just a quick way of using the volume profile and how to encompass it or incorporate it into your trading like I do each and every day. And I don't need a bunch of indicators to trade from because my style of trading is centered around supply and demand. But volume is important, so I like to use the volume profile because at least it shows me a story in a sense of what's going on and what has taken place in the market when price is creating these zones. All right, so that's all I have for you guys today. Hopefully you found some value in the content. I will show you the Discord right quick and talk about it for a moment. But if you're a newcomer and you're currently watching today's video here and you're seeking and wanting to find more information about supply and demand, check out the channel here. Simply go in, type in supply and demand, watch some of the videos. I have tons of live recorded sessions where you can catch me live, or my trade recaps, or where I'm actually have traded live, and you can watch the trade breakdowns, whatever the case is. Well, not so much trade breakdowns, but more so me taking trades and talking about the trades, whatever the case is. But there's lots of content on the channel, guys, what I'm trying to get at. But here's the Discord community. So if you're a newcomer and your first time viewer, please take the time to go ahead and subscribe. Click on the subscribe button below, that red button, as well as click on the bell and turn your post notifications on so you never miss one of the uploads here on the channel. This is our Discord community. We have well over 500 members now, and the reason being is because it's a great community. You know, we are simply future traders that come together and talk about the future markets each and every day, and there's a couple of trading channels, the general chat and the trading floor. The general chat is more so if you have discussion and you want to ask questions about something pertaining to the future markets in general, then you can go into the general chat section and converse with other traders. Trust me, if I click on it right now, you're going to see a lot of activity. People are always, in this channel as well, and asking questions, and people are answering. It's just we are here to help one another as traders, future traders along. But the trading floor is for individuals that are interested in discussing the actual trading session at hand. Once the stock exchange opens, once the New York session actually opens, the U.S. session open, we're looking at the future markets and we're talking about zones and levels of interest that we have interest at, and as well as trades that we take. So lots of people share their trading performances as well, and it's just a good group of traders that come together and we share information about the session. So if you're interested in joining, please take the time. All you have to do is find the link down in the description portion of the video below. Invite yourself in. It's free of charge. And that's all I have for you guys today in this video. And I'll see you guys in the next one. If you're trading, please be safe. Take care. And that's it.